Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Ben Jones, product development specialist with Nasdaq's index research team. Ben, it's great to have you with us. Welcome to Trade Talks.
Thank you.
All right. Market, Nasdaq-100 index in particular, reaching new highs. It's like we went from new highs, depression, recession, back to all highs in less than 100 days. It's really quite remarkable what the market has done.
Yeah, it's certainly been a whirlwind, right? I mean, when you think about kind of what has happened the last 3 months or even just in 2020, it seems like every Friday when we have this call, we're celebrating some sort of milestone for the markets and really for the Nasdaq-100. And so, we saw the Nasdaq-100 reach an intraday high yesterday, and it's reached another new intraday high today, and it's on the verge of closing potentially at an all-time high. So it's something to watch. What's interesting is that we've seen kind of how the markets move back and forth, and really almost every day it just continues to push higher and higher. And what's interesting is when you look at the charts like this, right? When looking at the Nasdaq-100, this chart looks at basically about 12 months of the Nasdaq 100 over time. It just continues to kind of edge higher and higher off that March 2020 low. And with the recent movement that we saw yesterday, we saw the Nasdaq 100 really break through a lot of resistance. And a good type of chart to look at is a point and figure chart, which is available at Nasdaq Dorsey Wright. We saw the Nasdaq 100 break through that February resistance yesterday with that move above 9,740. What's noteworthy about the Nasdaq 100 reaching new highs, Jill, is that it's occurring during a recent 5-day stretch where we've seen kind of the Nasdaq 100 lag a little bit, some of its counterparts, which is interesting, and probably for the first time all year, right, where we've seen the Nasdaq 100 lag, some of the other indexes as well as some of the other kind of value-oriented areas of the market. This doesn't change the long-term trends by any means, but it is something to pay attention to. The Nasdaq 100 is up close to about 1% over the week. The S&P 500 is up a little over 2.2%, which is interesting. The Dow Jones Industrial Average is up about 3.5% for the week. So we have seen some of those large cap value industrial-like names perform well this week. If you look at the entire 2020 though, Nasdaq 100 is at the top, right? It's up over about 10% for the year. Dow Jones is down still about 7.9%. But when we celebrate this new intraday high, it's important to kind of watch what's happening this week as well, Jill.
And what the question is, and we could take a look at this on your next chart here, what's happening in the stock market in the Nasdaq 100 is really disconnected from the economic data that we're seeing. Your chart represents that really well. At the end of the day, we still have 40 million people unemployed. There is social unrest in our major cities, and the market just is not paying any attention to it. It's almost in its own universe. What do you think about that?
Yeah, you're absolutely right. You kind of scratch your head, right? Like, what is going on here? We're celebrating these new highs, but you look at the economic news, you look at the headlines, it's all fairly negative. So I think this chart is fascinating, right? And I need to give full credit to the kind of the idea behind it. It's actually, from a fellow Richmonder, Henry McVeigh of KKR. In his recent research note called Phase 2, the next chapter, McVeigh identified the recent disconnect between, and his example was the S&P 500 and a leading indicators index. And so after reading that note, I was curious, to see how the Nasdaq 100 stacked up in a similar comparison, right? Is there really truly a disconnect? And there is. And so what you see is the Nasdaq 100 compared to the U.S. index of leading indicators on this chart. And this leading indicators index tracks important economic metrics, right, and other indicators such as weekly unemployment claims and average weekly manufacturing hours and building permits and interest rate spreads, just to name a few. And so when we see this indicator move lower, it's a negative sign for the economy, right? Which is what we're all experiencing, what you see in the headlines. So according to McVeigh, markets are a discounting mechanism. And at the present time, the market is responding to improved financial conditions. So, Joe, this is to say that basically markets are forward-looking, right? So while today we see economic weakness, which is evident of the headlines, evident of the leading indicator, falling, if you go out in time, the market is basically, sees better conditions. So oftentimes in the long run, we should see markets and the leading indicators move together, which is certainly not the case today. So the Nasdaq-100 continues to push higher. We just talked about those new highs, but current economic data is weak. So the key is if things do get better, then you'll see the leading indicator, improve, start to rise, and kind of move in tandem with the market. But if conditions don't improve, then of course the market will respond, in a negative way. So overall, Joe, I think the key behind the disconnect is that markets are discounting mechanisms, and that's an important thing to remember.
All right, in your last chart here, we're taking a look at the Nasdaq-100 cap weighted versus equal weight. Why do you look at it in two different ways?
Yeah, because I think it paints an interesting picture, and you can really identify some subtle trends of what's going on underneath the surface, right, of the index or of a market. So, we talked about the improvement from the Dow Jones and some of those other, value styles. But what's important is that we've also seen some interesting performance trends in different, the size camps, right? Large cap versus small cap. And you're seeing it within the Nasdaq-100. So the Nasdaq-100, is comprised of, essentially the, 100 largest, companies. It's a cap-weighted index, right? And so you'll have Apple in the index, which has a market cap of, over, about 1.4 trillion. But you also have, NetApp in there, which has a market cap about, 10.65 billion. So the Nasdaq-100 index is market cap weighted, right? So the larger companies have larger weights and the larger impact in the index. But another index to track is the Nasdaq-100 equal weighted index, right? Which basically takes the same, companies, right? Just weights them in an equal weighted fashion. And so a good picture to think about is, just think about the U.S. Congress, right? You have the House of Representatives, which is essentially the cap-weighted index, where the largest states get the most representatives, right? California, New York. That's the Nasdaq-100 cap-weight, right? The largest stocks have the most weight. And then you have the Senate, right? Each state has the same number of senators. This is like the equal-weighted index, where NetApp and Apple essentially have the same weight in the equal-weighted index. And so when you compare the two, you can really see kind of what's driving or what's participating in the market. And, if we look at the chart on the left-hand side, right, basically looks at, about 6 months of data, you can just see how the cap-weighted index has been outperforming, right? It's up over, 5% more than the equal-weighted index. And this makes sense, right, Joe? When we think about this year, large cap technology, your Apples, your Microsofts of the world have done quite well. However, we've seen some interesting trends take place really since the beginning of May, where we have started to see kind of the equal-weighted and cap-weighted move relatively in tandem. And over the last week or so, we've seen the equal-weighted, diverge. So just this month, the equal-weighted is outperforming the cap-weighted about 4%. But this is a healthy sign, right? This is a healthy sign for the Nasdaq-100 cap-weighted, and it's a healthy sign for the market, right? Because it's important to see, really all stocks, stocks of varying degrees of sizes participate, right? And that's a key sign of market breadth, which is often a bullish sign for the markets going forward.
All right, Ben, great stuff as always. Thanks so much for joining me.
Thank you.
All right, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.